Welcome, everyone. This is the Wednesday edition, December 22nd, 2021 of the Financial and Sports Betting Market Show. My co-host is Steve Merril from WagerTalk fame. And it's been a while, Steve. We've been tied up dealing with, football and gridiron, and now we're, watching William and Mary, which is like watching Bitcoin, as you said before the show. But how are things been going?
Doing well. And, I love to use financial terms in the sports betting market. And we're doing this live Wednesday, December 22nd. My alma mater, I've held season tickets 21 years. Hey, if you're going to be number one at something, at least be number one at something, right? There's 358 Division I basketball teams, and William and Mary lost again today by 22 as a 15-point dog at Valparaiso. They're now 0-12 straight up in Division I games. They beat a Division III team, John, that was 1-6 against other Division III teams at the time. But they're 0-12 against Division I teams. But more amazingly is that they're 0-12 against the spread. 358 teams. Idaho State is 0-8 against the spread. They play in 1 hour this afternoon, so we'll see if that continues. I'm rooting for them to lose just so William Mary's not the worst point spread team at the end of the season. But it's a perfect example of not trying to catch that falling knife. And to be honest, their game before the layoff and the break a week and a half ago, I went to that game on a Sunday afternoon. They lost by 23 as an 8-point home dog. So they're actually getting farther away from the point spread. Really fascinating to study, though. There's always when you have 358 Division I teams, you're going to have some, statistical anomalies. But obviously the odds makers are not pricing them correctly. They're now 0-12 ATS and straight up. And, hey, if you've been fading that, you've been making a lot of money, and it's one of those catch-a-falling knife scenarios we warn you about.
No question. It's the, politely said, the dead cat bounce.
They haven't bounced yet, though.
Right. I mean, yeah, you don't touch, you don't try to be a hero, especially with stuff like Bitcoin and some of the things that we traded for. I guess we're getting a little bit older. We're not as old as Tony Finn, for God's sake, but, I told Tony I'd give him a shout out. He was saying some stuff, in our Slack, and, we always like our financial terms, and I told him we were going to talk about Bitcoin. So, Tony, this is, take our advice. Anyway,
it's funny. Bitcoin, of all the markets that are moving right now, Bitcoin actually has been one of the most calm the last few weeks. And this, of course, is a market that when we started doing shows last spring was as low as 32,000, back to 60,000, back down to 32,000, 69,000 2 months ago. Now it's about 48,000. But it's been kind of just zigzagging sideways. But we're seeing a lot of action and stuff. Crude oil starting to go a little bit higher. The currencies obviously are moving for the first time in a while. We're seeing the rates move. The rates have just been back and forth, zigzag more than anything. And most importantly is the S&P 500. Another big kick up the last couple of days after a drop. And I know you got a chart on that you're going to show. And I mean, look, we've said for 6-8 months now, right? There's very little upside. I know it's ticked a little higher, but we have said exactly that as well, that you might get another 5 or 10%. And you still might from here. I personally don't think you will, but no matter what metric, there's a lot of different metrics. Several of them now have this as historically the most expensive stock market ever in the U.S., which means you're overpaying. And then on top of that, the risk-reward, which is how you should look at every investment in life, every aspect of life, to be honest, is just god-awful. I mean, you're talking about maybe at best a 5 to 10% upside. I'm not even sure there's that. And obviously a 40 or 50% downside. We've seen that a couple of times within the last couple of decades. But back in the Great Depression, it went down 80%. We've had other markets go down 90, 100%. I'm not saying that's going to happen, folks, but just do the math there. A 5 to 10% upside versus a 40 to 50 to 80% downside is a terrible risk reward. And if you look at the chart, there's a lot of resistance. In fact, we're close to making a quadruple top, which you hardly ever see. We've had a triple top basically not be broken through here the last few months. So both from a valuation, fundamental, and technical aspect, even though it's breaking back a little bit now, I think this is actually a really good time to get short the S&P, and definitely, most importantly, not a time to put any new money in. And I know most people don't go short the S&P. That's fine. Just do not put any new money in right now. The risk reward is awful.
The chart is awful dark, so I apologize for that. But that's the S&P 500 futures for March contract. And, if you look closely, you can see the plateau there. There's big time resistance right in there at that 47.25-ish area. And I agree with you. The closer you get to that, the more you want to, lighten up. I'm sure some of the viewers have had holdings for many, many years, and there's nothing wrong with reallocating even IRAs to a more conservative stance, in our humble opinions. We're not certified financial planners, but we've done this an awful long time on the trading front, and even that profile, Steve, that we started looking at in the last show a couple of months ago before the college football season got in full swing, the Stoudemire profile on a weekly bar is really suggesting that look out below. And I'm not saying this is going to be a crash, but these could be prices that you're seeing that you may not see for a couple years going forward. And you add in the Omicron, and it does make you take a pause and reassess.
Yeah, and I mean, the problem, of course, like you just said, is, most people don't go long and short. They just go long. That's fine. I get that. And, once again, just don't have any new cash in the market right now. The risk reward is terrible. The problem, though, is that where do you put your cash? Because inflation's about as bad as it's ever been, when, in fact, it is as bad as it's ever been the past 38 years. I mean, that's a numerical thing that just came out this past month. So theoretically, if you just hold cash, you're losing more than you've ever lost the last 4 decades right now. We'll show you some other charts here. Obviously, the Aussie dollar is starting to break up a little bit, break higher. Natural gas, a lot of people are going to have much higher heating costs this winter. I actually think natural gas is hitting a ceiling right now. It could actually go lower. But of course, if you ever wanted to hedge your heating costs, you could go long. I wouldn't go long natural gas. But I also think the rates, the one surety in my point is that they got to raise rates. They've already you keep speculating towards that. But at some point, I think that rubber band's going to snap, and once again, it looks like the 30-year is starting to break a little bit lower, along with the other ones following here the past few days. There again, risk reward on the bond trades, when it goes higher, that means rates go lower. So let's just keep it simple, say rates. It's hard to imagine rates can go much lower than where they are now. They've already kind of exhausted all of that, and they've already said they're going to probably raise 3 times next year. So it doesn't make much sense to me why the bonds wouldn't start dropping. The price of the bonds drop when the interest rates go up. Obviously, so short notes and bonds is somewhere you could put your money as a little bit of a hedge, I guess.
Yeah, I agree, and that's a chart of the Aussie, and that's a weekly bar. So for people who have never seen a candlestick chart, the red candles mean that the opening for the week was higher than the close, or you can say the close was lower than the opening, and so a negative week, lost ground in terms of price. Green is the direct opposite. And then you look for patterns where we did have, I don't know if we can see it. Yes, we can. If you look at the top, the all-time high, and
this is the S&P, right? S&P, yeah.
You have the rare combination of 2 different patterns. An engulfing candle makes a higher high from the previous day, lower low, and then closes below the low of the previous day. This closed on the low of the day, which made it an inverted hammer. So if you look at that bar, it kind of looks like an upside down hammer with a huge, head on the end of the handle. And you saw what happened. It went down hard. It lost 200 points in about 5 days, which is the equivalent of about 1,800 Dow points, and that's pretty severe. Then we got better news, out of the some of the plans that are now starting to hit some pushback in Congress to help infrastructure and enormous bills that. One, I know Steve agrees with me on this. Like, you got to also consider when are you going to pay this all back, because if you don't, then it really does lead to inflationary pressures becoming even worse. And what that driving force is that the dollar gets weaker because economies around the world really don't want to deal with the United States that has inflation at 8% a year. We saw what happened in the late 70s with the price freezes, which was at the time a very good idea, but it failed. And it failed miserably, and it forced the Federal Reserve under Paul Volcker to raise interest rates to 22%. And we don't really need to relive that. I certainly don't. But this chart here, my concern, Steve, is you have the inverted engulfing candle, and then you made a dramatic attempt to blow right through it, and it stalled out with several little small bars from last week that you can see. Not much volatility, not much action, just kind of floating along there. And then you got another 3 red candles in a row, and then we had the up 500 in the Dow yesterday with some follow through today, but you're getting bearish divergence. And what bearish divergence is that when you rally, you don't take out the previous high, and you fail to slightly below it. So when you look at the indicators, the oscillators, RSI, moving average oscillators, whatever it is that you track, those are going to confirm what I'm just saying. They too will not make new highs in their readings, and then it confirms the bearishness. So I think there's, one scenario is that, as Steve said, we don't make a new high, or we get some news, out of Congress, or Omicron is under control, something major. We blow through it, but on the same day, we fail and come back down through, and we don't sustain it. That would be a major bearish sign, in my opinion.
Yeah, I mean, like you said, look at that all-time high was an intraday high. It didn't close at the all-time high, that big spike from about a month ago.
That's right.
And then you look at the one about a week ago, the other one that broke through the closing high but then fell short once again of an all-time high, is also an extremely down candle. It's red, So basically it opened almost at the high of the day. It opened at almost an all-time high and it got no traction after that. And now, as of the last 2 days, you see those 2 white candles on the right-hand side there. That's the last 2 days, Tuesday and Wednesday. We're creeping ever so close. You can never really time the market, but man, this is about as good as I've ever seen as far as, once again, risk-reward. It might go back up and test that all-time high, maybe go short from there. But if you really want to play it right, here's what you do. You short it right now. You put a stop loss a little bit higher than that all-time wick, which you take maybe a 1 or 2% hit if you're wrong, but if you're right, you've got at least a 10%. We used to have 10% corrections all the time, and just going back down to low of the recent range there would be like a 10% correction, which is very standard. But there's also room for even more than that. So here again, you talk about a good risk reward. Short it now. You put a tight stop loss above the all-time intraday high. And then, if you're out, you lose a couple percent. But if you're right, you can win 10, 20, 30%. It's a great risk to reward going down. It's a terrible risk to reward for the upside for the opposite reason.
We didn't talk about this before we went on the air, but my question to you, Steve, is it time to start considering buying the airlines, thinking that this time around there's not going to be a complete shutdown of the economy, and say by February, the beginning of spring on the East Coast, people will resume going back to normal lives again. I'm thinking that there's value in this decline. Alaska Air has always been I think the best run airline on the planet. What do you think?
Yeah, I'm not really on an individual stock picking basis. I kind of look at everything from a broad macro, indexes, sectors. So, my problem with picking any stock is that they're almost all like 90% correlated. So if the S&P has a down run, which I think it will, it's going to sink all the ships basically. And I know we're talking travel, no pun intended, but basically the S&P, one thing you got to keep in mind about the S&P is that it's the 500 biggest companies, yet 5 of those companies make up like a 20% of the entire index. It's Amazon, companies like Amazon, Netflix, Walmart, Apple, Google, all these big boys carry a heavy weight of this index. If you look at the NASDAQ, it's still down. If you look at the Russell, it's been down for a couple months now. If you look at other indices like India, Russia, Brazil, some of the BRIC countries, they've been down for several months, trending down as far as my trend following method goes. So the S&P is really the only one that's kind of spiking a little bit higher, and a lot of that's always just a handful of companies. So I'd be hesitant to pick any individual stocks, including airlines, for that reason. I think if the S&P has downside risk, which it does, any stock that's in that realm is going to come down with it. And keep in mind, this is what happened during COVID. And in hindsight, you can definitely make a lot of money selecting stocks, picking stocks, because everything went down in March of 2020, right? In hindsight, though, we should have been buying Amazon. We should have been buying Netflix. We should have been buying Clorox. And Clorox, by the way, has gotten hammered the last year or so because it was an overreaction. So you can definitely time the market with individual stocks. But with inflation and with the market itself going down, I'd be careful with any kind of big time company, including airlines.
Yeah, and I have just going to pull up ticker symbol is LOVE, LUV.
Southwest.
Yeah, that's my second.
Yeah, no, when you said Alaska, I thought of Southwest, right? I was actually pulling that one up as well. I'll look at them with you here. I'll look at the recent charts of the airlines.
Yeah, that's LOVE, Southwest.
Yeah, and you can see it's definitely in a downward trend still. So I do think your point is a good one, John. If you want to be long equities, you're better off, and I will say this, you're better off selecting stocks individually like this one than the broad S&P. Because once again, the S&P, you're really owning like Apple, Google, Amazon. It's like that's what you're getting when you buy the S&P. Yep. They're going to move that market. So, and the NASDAQ is trending down a little bit, which tells you the tech stocks aren't doing as well as the overall market. So yeah, I think you're better off if you're going to be long equities. This would be the way to do it. And look, it looks like it could be bottoming. And here again, it's the exact opposite scenario. You set a very tight stop loss versus the Monday low there, which is like a 1 year low. And then you've got tremendous upside still. If you're right, if you're wrong, you only lose 1 or 2%. So if you want to be long equities and not just sit in cash, this would be a much better way to do it, is to play a select stock like this one long, as opposed to the S&P overall or the Dow or any other index.
Yeah, I definitely agree. Definitely agree. It's a small version of you're not catching a falling axe. You're just catching a falling paring knife with love, and it's still not a good thing to do.
Well, and here's the other thing too: is the whole reason the S&P is up as much as it's been since COVID, which in hindsight we would have been shocked by this, that it was up this much, 2 years ago when it was plummeting, is first of all inflation once again. These prices aren't what they were 5 years ago. The market value right now is not what it would have been 3 years ago at this same price range. Because money is cheaper now and it's inflated. There's nowhere else to put your money because of inflation, so everyone's piling it into equities. And then on top of that, the big boys that make up the S&P 500 that keep naming, Amazon, Netflix, all the tech companies, they did great during the damn shutdown. It was good for them, which is, that's a whole nother podcast we'd have about conspiracy theories or whatnot, but that's the fact of the matter. And it was terrible for the airlines, right? It basically almost shut them down permanently. So if those companies are overpriced like Amazon, Walmart, Google, then the airlines are probably definitely underpriced at this point if we ever get back to normal. So that also makes a lot of sense from a fundamental perspective. I like where you're going with that. And that's the great thing about stocks is you don't have to buy the index. You can buy individual stocks. And my point earlier about them all falling in March of 2020, though, is you can be right about a stock, but they're going to fall because people have to sell the good stuff sometimes to cover the bad stuff. So that's why like Amazon and Netflix took a big hit in March of 2020. In hindsight, what I wish was aware of quicker is I would have gotten in on those faster, because there was obviously tremendous upside with the shutdown benefiting those companies. And maybe that's the case with airlines. Maybe the reopening now is going to benefit the airlines, hurt Amazon and stuff, which it theoretically should. If people aren't shut down, they don't need Amazon and Google and Netflix as much. And that would actually hurt the S&P because they make up a big chunk of it.
Well said. Exactly right. I'm looking at Amazon right now, and it's, it basically has a double top at 37.50.
Looks like the S&P, right?
Yeah, a little bit worse.
Yeah,
but
that's interesting. Well, that makes sense though, because if that's a heavy part of the S&P, whereas the airlines, which are all basically at bottoms, are a part of it as well, then the S&P should kind of be a little less bad than that, a little bit better than the others, and that's what we're seeing. So I think you're onto something. It's a great way to play it. Instead of just playing the S&P, play the stocks within the S&P you think can maybe have some upside, and I think the airlines look like that's probably a better play for that reason. And it's also kind of an ugly trade. I like ugly trades. Trades that are hard to pull the trigger on usually work better from a sentiment indicator, as you know, John.
It's true. Yeah, sentiment. We use it in sports betting, and I found this year, Steve, that in the NFL, you won't be surprised that Philadelphia and the New York metropolitan areas have the greatest swings, literally hour to hour. After a game is over, the reaction is severe. If they lost and the fan base thought they should win as a favorite, then it's off with their head, fire the coach, the quarterback sucks. And it actually it happened with the Sixers. I remember you were on the Manny's Pub show on the day that we were talking about Ben Simmons and the the whole negativity regarding that. Now, before the end of the season, before the playoffs, the Sixers fan base set the lowest reading I'd ever seen in 5 years that I've been running this app on Twitter. You know what happened that night? Simmons had a triple-double, and they won by 20.
Yeah, it's incredible.
This past year, when the week before the Detroit Lions game, they played on the road at Detroit, broke that record. And it was literally the local media, which I can only watch or listen to for about a minute. And Rob Vino will agree with that. It's tough to listen to because I don't like it when people are just bashing human beings and saying they suck and they're not, they're no good. And, this guy's getting $300 million for what, in baseball. I mean, it just drives me nuts. All these athletes that get paid the big bucks work their butts off at some point. And even though you may not think they are now, they probably are. Not probably, they definitely are. They wouldn't be getting the money. So anyway, they broke the record for the worst negative sentiment. And my models actually had the bet on the Eagles. And what was the final? 42-6 or something? 42-10?
Yeah, and that was one of the public dogs. I remember on my NFL video, one of the biggest square play I've seen all year, John, was the Detroit Lions. They were a winless home underdog. And here's the kicker for me. And I actually used the Eagles as a free play that Sunday on WagerTalk.com on my personal page. It was my last cut from the best bet card. I put that up like on Friday. That weekend, have a really good friend who's an Eagles fan, have another good friend who's an Eagles fan. I saw both of them that weekend. Before the game, they're like, they have no chance against Detroit. And when I heard that, I actually upgraded to a best bet for myself. I'd already put it out as a free play. That's maybe a textbook example of the most public contrarian play I've ever seen, maybe. And then, like you said, it wasn't even close. I mean, it wasn't even close. But when I had Eagle fans concerned about the winless Detroit Lions, I knew that. So that's, it's not always right. In fact, my Fade the Public video has gotten crushed the last few weeks. The public's just been on fire. I think they're 10-1 the last 3 weeks. They've gone 4-13 the 5 weeks before that, by the way. But and it's like the markets here again. It's like you're not always right, you're not always wrong, but you kind of see the rollover coming, and when they're that hot or there's that much sentiment lining up. It's look, nothing's 100% locked, but that Eagles play in hindsight was probably an 85% semi-lock. I mean, it just I love it when everything comes together like that.
Yeah, and I think it happened last night with Villanova. They had gone 3 straight games shooting 35% or lower.
Had a best bet on them last night. That was my top college play. And I'd gotten crushed with them last week. Had a guy sign up for the first time. I've been number 1 the last 2 years combined, including both seasons at WagerTalk.com and college hoops. Guy jumped on last Friday or the week, whenever I had Villanova and they lost by like 20 in that game. What happened here? I'm like, you got to be kidding me. I've been doing this for 25 years. It's one game. So I felt so good about Villanova last night for that reason, John. So that's interesting. I hadn't talked to you about that, so that's very interesting. But I liked them for the exact reason. You got one of the best teams in the country coming off some bad showings. That's what now it's the opposite with William & Mary. They've shot 30-some% every game this year. That's why they're 0-12 against the spread, right? It's a total different situation. But I love playing Class A teams in any sport. I had Buffalo Bills. I was with the public on the Buffalo Bills Sunday. It was the most public play of the week. One of the more public plays I've seen in a couple months. But I didn't let that keep me off it. I used it as a filter. All my other indicators had Buffalo bouncing back against a Carolina team that's bad offensively. And by the way, that line went from look ahead was 9.5. I did the video on Friday night. It was 13. I put it out at 13 Saturday night for my clients at WagerTalk.com. Goes to 14 on Sunday morning. 14.5, closes 15. I was like, oh boy, I know how this is going to play out. They're going to win by exactly 14, and they won by 17. Yeah. But so there does come a point when you lose value, just like the S&P now, you're losing value. It doesn't mean they can't still win by 17, but not sure I would have put that out at 15. I put it out at 13, and that's a big difference long term.
Yeah, I agree. And I'm thinking of your William & Mary team, and I think an excellent way to fade them would be, if they they were obviously good high school players at some point.
Yeah, so I've gone to half the games. They're very athletic, actually. When I first saw them this year, they're very young. First of all, just catch people up. The COVID crushed mid-major teams like this because they lost a grad transfer to Minnesota, their best player. He could have gone anyway because he was a grad guy, but nobody had to sit out this year. So all these schools lost good players because they can go instantly to another school. They're all were freshmen last year and half real freshmen this year, playing all teams that have everybody back because everyone got another year. So it's a perfect storm of awfulness. And they look athletic out there, but they can't shoot. And that's what I noticed in the very first game against American. One of only 2 games they were favored this year, and they lost. Was that there was a 6-point game with 6 minutes to go, 7 straight possessions they did not score, and it was still a 6-point game. An average team would win a game like that because they would have hit a couple threes and they would be up by then. And and you can't cure bad shooting, and that's another thing with the odds makers not catching on. Then on top of that, they don't play good defense, turnover problems. I forgot to mention that earlier because they're young, and they play fairly fast. They don't play really slow half court, so it's just a perfect storm of awfulness. And the odds makers have obviously not caught on. Now, we always look for that catalyst. Conference play begins in January in about a week and a half, or less, about a week. Maybe that if they start covering or playing better there, that could be the buy sign because they'll be playing, it'd be more apples to apples at that point. But there again, why try to guess, right? If you've been trying to guess this season, you're 0-12 right now.
Yeah.
So,
but I got to think, if I research the in-game stuff, that there's pockets of time where they probably play really well, and then when they play really well, and say they're hypothetical, they're plus 10, playing Drexel,
right,
and suddenly the in-game bet gets down to only maybe even pick or plus 2.5, and I do during the first half, right? So you
fade. I thoroughly agree with
Drexel.
that. Yeah, because I was just going to say, these second halves have been getting away from them. I was following the score live today at Valpo. They were down by about 15 with 7 minutes to go, or 18. They ended up losing by 22. It got worse.
Yeah.
I went to the Old Dominion game a few weeks ago. They were an 8-point home dog. I used Old Dominion as my free play in the college basketball show on WagerTalk.com. It was a little bit of an emotional hedge. I was kind of having some fun with it. But Old Dominion ended up winning by 15 as an 8-point road favorite. If I'm not mistaken, William Merril was winning by 1 outright at halftime in that game.
There you go.
I got to the Fairfield game the other Sunday, and William Merril was up 13-12 as an 8-point home dog again, and they ended up losing by 23. So you're exactly right. Of course, a little bit of hindsight biasy, right? Because we're talking about the worst point spread team in the country now. So obviously they've probably been a great fade in game at numerous times for that reason. But you're onto something there, and there again, that's about buying low, selling high, right? It's kind of the opposite. You're selling high. Selling high, I guess you could say in that situation, because or you're buying the other team low. You're buying the other team low, basically. But yeah, the ebb and flow on that is very good to use, and there again, that's another momentum indicator, and it's another falling knife, right? It's like if the team is still trailing and getting blown out, you don't try to buy in at plus 28, 20 plus 30. What was that Arizona State football game last year? Gabe Morency tells me that story. He was on live on Sports Grid, and they got down 28-0. And they just kept buying in at plus 30. And Justin Line was plus 40. They can't lose by 40. They can't lose by 50. And they lost. Arizona State was 0-2 at the time. Arizona State beat them 70-7, I believe. And
wow.
The in-game lines halfway through were 30, 40. And they're oh, this can't be. But it was there for a reason. And nothing had shown that the momentum was changing. And that's a good textbook example of that, actually.
Oh, it sure is. Definitely is. Well, I know you got the NBA show coming up at 4 o'clock. I just got over feeling sorry for myself that nobody wanted to see my NBA angle of the day anymore.
I haven't been on the NBA. I've only been on the NBA show once or twice all season because I haven't been able to make it that late in the day recently. And this is the 1 week I'm able to do it. So I was not even aware they were not doing the angle of the day now that you said that.
If I was completely transparent and 100% honest, because I don't have time to provide it right now, because I'm the host of all those shows over on Sports Memo TV, which is owned by the same guys that own WagerTalk, and it's a lot of fun. Got to meet a lot of new, smart handicappers. Rocky Atkinson, you and I have known him since our days back in 1998 when we started this thing on VegasExperts.com.
That's right. And Ronald Cabang, one of the young guys, was on WagerTalk today with us today, and he mentioned you guys are doing an NBA show, speaking of the NBA. Ronald's a sharp guy, too, out of Seattle. Rocky out of South Carolina does NASCAR with me. And, it's a great network. And like you and I do just talking off the air, it's great to brainstorm with all these guys. Not everyone's going to win or lose on a given night or even a given season sometimes, but these guys all know what they're doing, and they're on these sites for a reason. So do you have any angles for me? I'm looking at the list of games that just came out. The NBA's been rough, and I really haven't missed doing the show, to be honest, because with COVID and stuff the last few weeks, it's been a nightmare. They don't even know what games they're going to do for the show until literally, an hour before. But
True.
It looks like the contrarian game is going to be Thunder and Nuggets.
Yes, and we did that on the NBA show today. Ronald and I actually the last 8 shows were 20-6.
All right, so
Against
give me
the number.
something on that one. I've got one best bet tonight on the late game between the Kings and Clippers, and we're not covering that on the show, so I didn't have too much on these other games. So we got Thunder, and he actually mentioned that one, I believe, on WagerTalk today also, right before I was on. Featured game is going to be Celtics Cavs. The over-under game is going to be the overtime game. The over-under is going to be Rockets Bucks. And then I'll need to come up with one. That's my dog. That's actually that is a pretty damn good. That's one of the best. When I was on the other week, I did get a chuckle out of that. They've got Underdog. They got Dog the Bounty Hunter. They got some great pictures. Snoop Dogg. It's pretty good stuff. And yeah, speaking of our usual suspects, Rob Vino is on with me, it looks like, and then Andy Lang, who does the NASCAR show with me and Rocky. So Andy, the prop master. He has a player prop as his free play, which I'm not going to spoil, but I see it here in our notes. So, yeah, it should be a pretty good show today. It's on WagerTalk TV here around 4 o'clock Eastern, and then archived 24/7 all the time on WagerTalk TV on YouTube. Of course, our shows here are also on your page, John, archived. So we'll have to repost that in a little bit here on Twitter. I know several people have been saying, hey, when are you guys talking Bitcoin, doing some financial shows? And Bitcoin's not the most exciting one right now, but I think like these other ones we talked about, S&P 500. Natural gas, by the way, quickly, I think it's dropped a lot the last few weeks. Obviously, it got very pricey. People are getting pissed. Their heating bills are going up. The administration has to get it back down. It's trying to fill a gap from like a week ago, and it's bumped up against it like 5 straight days. It's right about 4.0 to keep it simple. If it doesn't get above 4.0, I think there could be a lot of downsides still, because heating costs for the next few months, you just got to figure the administration does not want. It's bad enough gas prices have gone up, almost double. It's like they don't need another hit on people with inflation on top of that. So, and there's a lot of things they could do. They shut down pipelines and whatnot, and that still hasn't been reopened. So there's stuff they could do to really lower. So I think there's some downside potential still with natural gas. It's just my free play for the show here. We'll see if I'm right or not, but it's something I'm keeping a close eye on.
Well, I don't have a specific trade for the trade of the day, but Oklahoma City will be my best bet for the show. And
I'll use that as my contrarian then. I will agree with the contrarian on your behalf. I'll give you a shout out there.
And I will, as soon as we end here, I will give you the betting angle of the day, and you can force it down Joe Ranieri's.
Now, is it that game, or is it going to be a different game?
No, it'll be Oklahoma City.
Okay, send that to me. I'll try to have him throw it up when I use that. When I agree with the contrarian. Joe's always a happy camper when you agree with the contrarian play of the day. And I think the 2 or 3 times I've been on this year, I've disagreed every time. So this will be good. It'll be a lot easier to get the chart up because he'll be happy that I'm agreeing with the Thunder.
Yeah, it's good. Yeah, hopefully it'll win too.
Let's hope they don't lose by 70 like they did a few weeks ago, which is an NBA record, right?
That's the all-time record.
Whatever. I still can't get over that broke a record. You would think there would have been some performances even worse, like during Wilt the Stilt or something. But that's
the ABA days, like some kind of crazy,
really remarkable.
It is. I mean, to lose like that is, a professional's not even going to blink an eye on that. Okay, we lost a game. We knew we lost a game in the first 5 minutes, and we finished it out. And now we're, it's an 82-game season.
But you know what? Really bad offensive team, the Thunder. William & Mary, as I mentioned, not a good shooting team. The NFL, the public's done very well the last few weeks, as we've talked about. There's some really bad offensive teams in the NFL this year. There again, especially in football, when you get behind as a big dog and you can't throw the ball and you can't score, the floodgates open. So it's amazing to me as much parity as we have in these leagues now that there's so many bad, really bad teams like the Texans, the Jags, and the public doesn't necessarily play teams. They just don't play other teams. And the Panthers, who they faded this week once again, and I agreed with them. With the Bills, the Panthers get behind in that game like I thought they would against a Buffalo team off back-to-back losses. They can't catch up, and it's just like offensively challenged teams are tough to back, and the Thunder are definitely an example of that this year in the NBA. A really bad shooting team. That's where it can get really ugly at times.
Yeah, I agree. And the Detroit Lions were, even when they were winless, I didn't think were the worst team in the league. They had plenty of games they were leading in the fourth quarter.
Spreads, and they were competitive.
Yep.
Half their
Except for the
losses were
Eagles
single
game.
digits. Yeah, half their losses were single. And that's exactly why, though, the public liked them so much, is because they were somewhat right about they're not the worst team, even though they're winless. But that was an example of the Eagles not getting enough respect where they were, I don't want to say, I guess you could say decent. I mean, the NFC East are definitely decent,
Right.
other than the Cowboys. But yeah, that one thing I do like also is to play these public angles when you're getting a decent team. Like, it's very hard to pull the trigger with the Texans or the Jags, and for the most part, it's a good thing if you haven't this year because they're still like 35-40% at best against the spread. What I do like is when you're playing a decent team. That's why I love fading public dogs. We don't get a lot of those, but that was an example. The Eagles were the better team, yet they weren't being loved. That's really is a red flag when you're looking at public indicators.
Yeah, great show, Steve. And
Yeah,
I'm gonna give this to you right when we're done here, but. Appreciate your time, and we don't have a formal schedule together yet, but our goal is to have several shows during the week at a certain time of the mid-afternoon like today, but they'll be archived, and you can get them anytime then. And a lot of this stuff will have a big green shelf life, and some of the stuff we said today will be meaningful years from now in terms of trading strategies. So, Steve, thanks for your time. We'll look forward to seeing you guys next time, whenever that show is. We'll let you know. And on behalf of Steve, myself, and WagerTalk and Sports Memo TV, may all the trades be profitable for you. Thanks for watching.